G'day folks, welcome back to another update for natural gas. Now the price is still bullish on the daily chart at least, and we still have a hourly divergence in play, so just be aware of that. We're going to include some back testing. If we're going to go any further, make sure you hit that like and subscribe button, it'd be greatly appreciated. Also reference the +1 videos for a deeper dive in some of the trading strategies we cover, including today's. Now in terms of the outlook, as of today, October 3rd, natural gas markets remain tight with Europe reliant on LNG to replace Russian inflows, US stocks near normal, and global demand growth slowing. Prices are firm with Henry Hub above $4, while Europe and Asia compete for LNG, adding volatility. For geopolitical risks, Russia's supply cuts, Middle East tensions, and shipping choke points continue to threaten stability, while high prices, project delays, and climate policies may curb demand or reshape long-term supply chains. So remember, we always trade in direction of the higher time frame. So first looking at the longer time frame on the weekly, the price has broken through that moving average range, giving us a bullish momentum. You can see there the CCI has already broken through that moving average range as well, although there was a bit of consolidation in that CCI. And I'd like to see these moving averages start bending up and trending up like they were back here, for example. That just gives you a bit more confidence in the bullish movement on the weekly. On the daily, they've already done that. It's already broken above the moving average range, and the moving average range the multiple moving averages have started to trend upwards, which is always a good sign. The CCI did it a bit earlier, and back here we had a bullish divergence. And we marked that with a 23-38% target range. And again, for those new to the channel, we take Fibonacci to a recent high before the divergence started, and that's at 23-38%. We take it back to significant high there. This one, in terms of the highs, we don't go to that high there because I'd like to see it break at least above the moving average range. See, this here was a pretty strong downtrend still, so I didn't consider that a high before the divergence. That's why I've chosen this area here. You could have taken it back to that area, and that still would have broken up through the 23-38% range of that Fibonacci range. Now on the daily, there's no divergence currently in play. Both the price and the CCI are moving above the moving averages. Bit of a retrace happening at the moment, slight retrace on the daily. We also look at the smaller time frames. So even if you're trading on the daily, it's worth looking at the hourly time frame to see what's happening. And by that I mean look out for any divergence. Now we had here before our last video a bearish divergence. This one, as I say, we want to see a bit of a break to the downside with the moving averages as well to start measuring a Fibonacci retrace. In this case, it didn't happen. It came into that moving average range, kept rising. Again, I'd like to see something like this happen to start measuring a divergence. Now in this case, that divergence would have been extended to that point. Let's see what it did from there. Same period there. Now that still hasn't pulled back. But what's happened since then, we just extend it. As long as the CCI keeps dropping, the highs keep dropping, and the highs on the price keep rising, we just extend that divergence. So what we do from here as well, raise that. Now this one might be a start of a bit of a retrace to the downside. Notice there the moving average on the price is constricted. So what we want to do now, the moving average of the CCI has already broken to the downside. It has been now for a number of couple of days actually. So what we do, I'll draw a Fibonacci on this one to see if it continues on a downside. Now you can see there it's already hit that 23%. So let's pull it back to that significant low there. That too has already been touched as well, just in that 23-38% range. And that's all you need it to do, is to touch that range. And from there it could actually bounce, or it could actually consolidate in a period for some time, or drop right through it. At this point it's already touched it, so it's actually executed that bearish divergence. Now we'll just see where it goes from here. At the moment the CCI is dropping on the hourly, so very likely I might see further downside possibly, so just keep an eye on that. So even if the price goes up and that CCI keeps dropping, we're going to consider that a bearish move. Now on the back test, you would have gone long from this point here around about the 28th of August, which is this period here on the 1 hour chart. And remember, there's two exit points you could have taken. Again, reference the +1 videos to get a deeper dive, but basically watch the daily. As long as the daily is above the CCI and the price are above the moving averages, you let the hourly run long. At the very latest, you get out of the hourly trade when the daily hits that moving average range on the CCI there. So you would have got out the very latest on that candle. But also notice here on the 1 hour chart, we had a couple of bearish divergence. Now during this period, you could have exited with a few profits. You would have exited and started taking your profits. And what I like to see, zooming out at this level, I like to see these moving averages from a distance. don't necessarily go in too close because sometimes you can be blinded by the bug on the windscreen. I like to zoom out a bit on the 1 hour chart at least. So when you see the moving averages with the divergence in play start bending down like they were here on the CCI, and it started bending down there on the price as well, you would have got out of any long trades at that point after that bearish divergence, because what it did eventually started pulling back. Both the CCI and the price started pulling back, and you would have avoided that drawdown. Now back here you also had a potential area to get out as well. That was still a bearish divergence, so that could have been another area, and you would have had no contracts open at that point. So again, each along of these periods here, along these, as you're drawing the divergence, like we just did it back here on the hourly, it's always a good opportunity to take your profits and wait for a more consistent move either one way or the other in alignment with the daily. So again, avoiding that drawdown, going long again during this period, avoiding that decline, and then going long again, as we said, and just get rid of that Fibonacci. Now at the moment, as I said on the hourly, you're seeing a bearish divergence, and if you're going long and started seeing a break to the downside, and the CCI, the moving average of the price is potentially going to start bending down. If you're going long and you're still in a long position at the moment, it's probably worth taking your profits. Or if you've got a couple of contracts open, maybe closing those and taking your profits. So for BOIL on the weekly, the price is below the moving average range, and so is the CCI. So bearish momentum at the moment on the weekly. It's a very bad looking chart on that one. On the daily, we've got a bounce up from this bullish divergence, higher lows back here. Now I've drawn a target range there, and this one's actually just bounced below it, but it looks like it's coming close to hitting that target range at the moment, with the CCI still rising and the price may still rise as well. Now that target range was drawn from that low after that divergence seems to start. You could take it back to that level, and it's already hit that 23-38% range. In this case, I took it back to that significant high. Again, why did I take it there and not there? If I get rid of that divergence for a moment, you can see there the moving average range is still declining. So although it was a recent high before that divergence, I'd like to see it break above the moving average range like it did here, and that's why I've drawn the target range there. So it's not far off hitting that 23% at the moment, and could possibly do that in the coming days. Again, keep an eye on that. On the hourly, you can see there we had a working backwards. There's no divergence that I can see. That CCI is moving in line with the price. Now the CCI is already pulled back, so if you're going short, remember we're trading in a direction. If you're trading on the hourly, we're trading direction of the daily. Now you could possibly start taking long trades from here, and which means you could have taken that long trade during that period on the hourly. If we go to the back test here, first off, going short from this period back here on the 19th of May on the hourly, you would have taken short positions and avoid close out your positions once you're seeing the especially bullish divergence along this journey. There's a bullish divergence there. The price and the CCI moving averages started bending up. You would have avoided or closed out your positions there. Another bullish divergence there, close it out. Going short, bullish divergence being developed. You could have closed it out any time during that period. Once you're seeing a bit of a retrace back there, for example, or there. But this one eventually closed out your positions there. So for KOLD on the weekly, first off, the price is above the moving average. Although notice both the price and the CCI is pulling back towards the moving averages. The CCI has penetrated that moving average range, so it's come at somewhat neutral positioning at the moment on the weekly. On the daily, again working backwards, that CCI is moving in line with the price. There was almost a double top there. Yeah, in fact, you could argue that was a double top, and that's a bearish divergence, but I won't count it as a divergence at this point. At this point, you would have gone a lot short as well with the price breaking and the moving average range starting to break to the downside on the price, but also the CCI. You would have gone long from this period back here on the daily. If you're trading on the hourly, we had a couple of bullish divergence back here. That one came up and just touched the range there, then eventually broke through the range at that point. On the hourly, again, a bit of a roller coaster here, but again, notice we always mark these divergence. We had a bearish divergence there. And the reason we mark these is, as you know, once we go to the back test, you can identify very easily from a distance. Once I zoom out, you can identify where the bearish divergence was. So if you're going long during this period, you should have been closing it out once the moving average has started to bend down. That's why it's worth marking the divergence when you see them. Now, at the moment, the price and the CCI are aligned, so going short with the daily trend. And if we go to the back test, going long at this point from that where I've marked it there around about the 25th of June here on the hourly. And again, zooming out, you can see there we had a few divergence, closing it out at that point there when it broke down with the position open, going long again, another bearish divergence, going long, another bearish divergence, avoid going long there, bearish divergence, actually no bearish divergence there, but the moving averages started to bend down, going long again at that point and closing it out when both moving averages started to bend down. At this point now, you'd be going short from that point, and you would have entered a short position back there, and you would have closed it out with a position that CCI touching the moving average range, so near the bottom of that. Is it that one? That candle. You would have closed out your short positions on that one. And lastly, for UNG on the weekly, the price is below the moving average, so bearish momentum there. Although notice the CCI has hit that moving average range, so you would be going neutral and avoid going long or short if you're trading on the daily. On the daily, we would have been going short during this period with the price and the CCI in the decline. We did have a bearish divergence back there. Also note, I think I mentioned this a few times, but I'll mention it again. When you see a very narrow divergence, like in this case, the downside in this case is very volatile and you get a lot stronger pullback. Here it hasn't actually happened yet, but we might see a bit of a bounce quite strongly to the upside here possibly. Again, each of those points were hitting their targets of 23-38% range. That hit this support level as well, 1172. So you would have been going short from that period and then started going long positions once the moving average range on the price and the CCI broke to the upside. So we started taking long positions on that on the hourly if you're trading in accordance with the daily trend. So that's the daily. Then looking at the hourly chart, again working backwards, look for any divergence. None there. And you would, as I said, you would have started going long from that period according to the daily trend. And there was no divergence back there as well. The last divergence we had was back here. Bullish momentum on the CCI, or bullish divergence I should say, versus lower lows on the price. And that eventually broke up and consolidated in that 23-38% range for a number of days. Going to the back test, so going short from around about the 15th of May from this period on the hourly. Again, same sort of patterns. Watch the price movement below the moving averages and also the CCI, but especially watch any divergence and pull back on the moving averages on the hourly chart as well. So again, hitting this support line down here, and at the moment you would have been taking long positions from that point on in accordance with the daily. So if you enjoy the content, at least subscribe to the free trial on the Patreon page, where I publish weekly bullish shares across regions of the world's markets. Hit that like and subscribe button to support the channel. Thanks for watching, and see you in our next video.